So it used to be that having a large cash position was an asset, but it's increasingly a liability, a melting ice cube. Companies have different options they can do. Obviously, they can invest, they can do acquisitions, but it's not always the right environment for that or the right business decision. You don't want to do acquisitions, that are maybe not the best one just because you feel like you need to do something with the cash. Well, so prior to the meeting, we were seeing early signs that they were planning on, laying the foundations to get ready for tapering their asset purchases. And so, for example, they put in 2 standing repo facilities, even though at the moment there's no demand for repo. All the demand is for reverse repos. But they're still looking forward to putting those repo facilities in, which could prevent similar things to what happened back in 2019 when they were doing quantitative tightening. And also, all this reverse repo activity kind of shows that there's too much, ironically, too much liquidity in the system, and it's spilling back over into the Fed anyway. And so they're getting all these signs that it's getting ready near time to start discussing tapering. And so the big question that a lot of people had going into Jackson Hole was, would Powell announce a specific date for tapering or not? And my base case is that he probably would not, especially with the whole Delta variant happening. The Jackson Hole event was moved virtual. And so far, that's pretty much what we saw, where they kind of did a good cop, bad cop routine, where a number of Fed officials came out pretty hawkish. Some of them had specific tapering dates that they'd like to see, generally starting, maybe later this year and then ending in the first half of next year. Whereas Powell himself came out a little bit on the dovish side, didn't yet commit to any tapering plan. Discussed how interest rates are very disconnected from tapering, right? So just because they're planning on tapering doesn't mean they're planning on raising rates anytime soon. So that still probably has a little while ahead of us. It took quite a bit after the previous crisis, and this might happen quicker, but it still will take some time. And to be clear, that was for the interest rate, so they can start tapering their rate of asset purchases before then. But he kind of insisted they would not raise rates until we've hit, in his view, maximum employment. And so, right now they're buying $120 billion a month in assets. And it's important to keep in mind if they reduce that to 80 billion or 40 billion, they're still doing quantitative easing. They're still hyper dovish. They're just, slightly less dovish than they are now. The past 40 years or so, ever since Volcker raised rates and turned us from a structurally inflation to a disinflation period for 40 years, they've been kind of emphasizing inflation over unemployment, where they have 2 mandates that they balance, and they've been treating a 2% inflation target, especially in the past decade or so, more like a ceiling. Whereas going forward, they want to emphasize that unemployment is in their view probably more important, especially when you go down into not just one employment figure, but employment among different demographics, employment among different income levels, wider measures of unemployment, and that they're willing to let inflation run hot for periods of time in their view. I also think that if you take a step back and look at history, where we are in the long-term debt cycle, many countries don't really have much of a choice other than to run kind of persistently negative real rates for at least their short-term treasuries, even their long-term treasuries. And that's the part that they can't really say out loud, too much. So instead, it's focusing on that unemployment figure. I think kind of emphasizing that more so than the inflation figure. Or they can also consider, blockchain technology itself. Now, the Amazon already has kind of, things like that. We have kind of a mostly centralized blockchain-like database where you can track changes. So, kind of the whole point of a blockchain is that it's a really inefficient database that happens to be decentralized. So you pay the price of efficiency in order to have it decentralized and therefore less vulnerable to corruption or other risks. And so, they can explore what that means for them, whether or not they want to get into the smart contract space. It could be very useful for insurance companies, as an example. Basically, writing things through code rather than human decision. And so there's a bunch of different factors they can look into. And then as you get larger and larger, as the space gets bigger and bigger, there are more people that do want to pay in cryptos. And it could literally, again, just be stable coins where you're still accepting dollars, but just in a different form. And so they have a lot of work to do, I think, to understand the full kind of spectrum of ways that space is relevant to them in their business, because they don't want to fall behind. Well, so it's still early times. They haven't formally announced what that means. They're clearly, I don't think they fully know what that means yet. I think that's part of the position is that they want to have more people on board that are researching the space, that are understanding the space, and that are making recommendations to top executives. One way or another, we're clearly headed towards a digital future in terms of money. And so you have a variety of private assets like, say, Bitcoin or Ethereum. Then you have private stable coins like USDC, for example, Circle. Those more regulated types of coins. We've seen that Facebook has shown an interest in getting into the stablecoin market. So earlier it was Libra, then they faced some regulatory pushback. They kind of resurrected that as DM. We'll see where that goes. But clearly, stablecoin technology is very, very useful. And so that could have a large role to play in future payments. We also see various central banks around the world have kind of shifted towards researching central bank digital currencies. Some of them, like China, are far ahead of the curve. Other ones, like the Federal Reserve, are significantly far behind. And so they might be more willing to, say, partner with private, stablecoin issues and things like that. And so I think, these basically one way or another, any companies need to start figuring out what is the future of money going to look like. Do they want to accept, say, Bitcoin payments, including over Lightning, for example, which are very efficient payment mechanisms? Do they want to accept stable coins? What do they want to know about central bank digital currencies? And so any large company really should, at this point, I think, have some crypto experts on staff so that executives know what's going on. I think it'd be pretty rare, at least for a while, to see more companies do the MicroStrategy approach, where they put their entire balance sheet into Bitcoin. But certainly, companies with large cash positions, cash T-bills, they're finding themselves, inflation is higher than the interest rates that they're getting. And that environment could persist for quite a while. So it used to be that having a large cash position was an asset, but it's, increasingly a liability, a melting ice cube. Companies have different options they can do. Obviously, they can invest, they can do acquisitions, but it's not always the right environment for that or the right business decision. You don't want to do acquisitions that are maybe not the best one just because you feel like you need to do something with the cash. You want to make sure you do it at the right valuation for a right strategic reason. Companies can buy back their shares, but then they run into the issue that, say, the airlines faced during the pandemic, where they had done tens of billions of dollars of buybacks and then found themselves very vulnerable to a disruption in their industry. And so they basically decapitalized the business. And so you don't want to be caught vulnerable there either. And so yes, one of the things that they could do longer term is have part of an asset, part of a balance sheet in something like Bitcoin, where they're basically holding kind of an anti-inflationary asset on the side that can potentially appreciate in price. Now, currently, there's still very kind of complex accounting issues with that. They basically have to report losses, but then they can't really report gains associated with it. There are people that can follow that accounting, much more closely than I do. So there's still kind of work to be done in the industry. But that's kind of the going back to the point. Whereas I think they're exploring initially what they want to do. Do they want to accept it as payments? Do they want to put it on their balance sheet? Are there any other aspects of, say, smart contracts or things they might be able to use for their benefit? Certainly, you can see companies like Disney get into the NFT space. I mean, there's large kind of areas for them to explore in this rapidly growing ecosystem.